Welcome to our Chinese finance and economy briefing program. Today, we have some exciting updates from the world of technology and finance. First up, Xiaomi has launched its premium electric sedan, the SU7 Ultra, at a jaw-dropping price of 529,000 yuan, aiming to challenge luxury brands like Porsche. With 248,000 orders already in, Xiaomi is making waves in the EV market and plans to double its car deliveries this year. In other news, Hong Kong's largest developer, Sun Hung Kai Properties, reported an 18% drop in interim profits due to a decline in asset values. Despite a significant increase in sales, Chairman Raymond Kwok highlighted the ongoing challenges from economic uncertainties and geopolitical tensions, prompting the company to focus on generating recurring income from its rental properties. Lastly, Unitree Robotics is making headlines as it warns investors about potential scams amidst a surge in interest in its shares. The company, valued at around 12 billion yuan, has recently gained visibility through a popular TV show performance and is attracting attention from high-profile investors. Please stay tuned for more detailed insights. Nikkei Asia reports that Xiaomi, the leading Chinese smartphone manufacturer, has launched its highly anticipated electric sedan, the SU7 Ultra, priced at a competitive 529,000 yuan, $72,703, significantly lower than Porsche's Taycan. This price reduction, from a pre-order price of 814,900 yuan, is a gesture of gratitude towards its customers. The SU7 Ultra is touted as the fastest sedan globally, with tests showing it outpacing Porsche on the SAIC Shanghai International Circuit. Xiaomi's CEO, Lei Jun, emphasized the company's commitment to innovation, with a substantial R&D budget aimed at developing cutting-edge technologies, including artificial intelligence. With over 248,000 orders in less than 9 months since its first delivery, Xiaomi aims to double its car sales this year, positioning itself strongly in the competitive Chinese EV market. The South China Morning Post highlights the financial challenges faced by Sun Hung Kai Properties, SHKP, Hong Kong's largest developer, reporting an 18% drop in interim profits due to a significant decline in the value of its investment properties amidst a sluggish market. Despite a 45% increase in sales, the company's net profit fell to 7.5 billion Hong Kong dollars, $967.7 million US dollars, as geopolitical tensions and economic uncertainties dampened sentiment. Chairman Raymond Kwok noted the need for strategic management of gearing levels and emphasized plans to enhance recurring income through rental properties. The firm is set to launch various projects, including shopping malls and residential developments, to boost cash flow and adapt to changing market conditions, while also addressing the evolving retail landscape seen in the performance of its subsidiary, New World Department Store. In another report from the South China Morning Post, Unitree Robotics, a rising star in China's robotics sector, has issued a warning about scams targeting potential investors amidst heightened interest in its shares. The company clarified that all transactions are directly managed by its financing head to prevent fraud. Unitree's valuation is projected to reach at least 12 billion yuan, $1.6 billion US dollars, in its upcoming funding round, fueled by a surge in interest following a viral performance by its robots during a major national event. With its founder Wang Xinqing gaining recognition alongside other tech leaders, the company has attracted significant investments from various high-profile backers. As the robotics market heats up, investors are eager to secure a stake in promising startups, despite rising valuations and the risk of misinformation in the market. Nikkei Asia, Tencent has unveiled its latest AI model, the Hunyuan Turbo S, claiming it can respond to queries in under a second, positioning itself as a formidable competitor to DeepSeek's R1. This new model is designed to outpace previous versions and rivals by delivering rapid answers across various fields, including knowledge and reasoning, matching the capabilities of DeepSeek's V3 model. The launch comes in the wake of DeepSeek's impressive success, which has prompted major Chinese tech firms like Tencent and Alibaba to accelerate their AI development efforts. Tencent also highlighted that the operational costs associated with Turbo S are significantly lower than those of its predecessors, reflecting a shift in pricing strategies driven by competition in the AI sector. South China Morning Post, the potential for a Ukraine-US deal on rare earth minerals is being closely monitored, as it may provide the United States with alternative sources to counter China's export restrictions. Analysts suggest that improved relations between the US and Russia, alongside a possible agreement with Ukraine, could allow for increased shipments of essential minerals like lithium and neodymium, which are critical for high-tech industries. Despite this, China's dominance in rare earth supplies remains a challenge, as it controls a significant portion of global reserves and processing capabilities. The geopolitical landscape is shifting, and while new partnerships may emerge, experts caution that reliance on Ukraine's resources may not fully displace China's pivotal role in the supply chain. South China Morning Post: as China's annual two sessions approach, all eyes are on how the government will address economic recovery and navigate the ongoing trade tensions with the U.S. This year's discussions will focus on restoring confidence in the domestic market and tackling pressing economic challenges, including a decline in foreign direct investment. The meetings will also outline the future of China's innovation strategy post-2025, as the country seeks to solidify its position in the global tech landscape. Observers expect a renewed emphasis on employment and domestic demand, with potential increases in military spending and anti-corruption efforts also on the agenda. The outcomes of these sessions will be pivotal in shaping China's economic trajectory and its responses to external pressures, particularly from the U.S. Nikkei Asia reports that a significant capital shift is occurring as Asia funds and U.S. investors are increasingly investing in Chinese tech stocks, driven by the recent launch of the AI chatbot DeepSeek and a renewed commitment from President Xi Jinping to support the private sector. The Hang Seng Tech Index has seen a remarkable surge of over 30% this year, outperforming major global indices. Analysts suggest that this shift in sentiment among investors marks a pivotal change in the perception of China's technological capabilities, which are now seen as closer to those of the U.S. than previously thought. With a notable influx of $1.8 billion into the CraneShares CSI China Internet ETF, the demand for Chinese tech stocks is expected to continue, although domestic investors have been more cautious. South China Morning Post highlights the fluctuating nature of Hong Kong stocks as they experienced volatility following a tech-driven rally that pushed key indexes to multi-year highs. The Hang Seng Index saw a slight decline after reaching a three-year peak, reflecting a broader trend of investors rotating out of U.S. and other Asian markets towards Chinese stocks. This shift is influenced by upcoming legislative meetings in Beijing, where economic growth targets and fiscal policies will be discussed. Amid this backdrop, major companies like Alibaba and Tencent saw minor losses, while other sectors showed mixed results, indicating a cautious but ongoing interest in the Chinese market. South China Morning Post also details the U.S. government's recent proposal aimed at undermining China's dominant shipbuilding industry through steep port fees for Chinese-built vessels. While the plan may benefit U.S. allies like South Korea and Japan, analysts caution that these countries may struggle to fill the production gap due to existing market dynamics and labor shortages. The feasibility of enforcing such fees remains uncertain, particularly given China's substantial share of the global shipbuilding market. Efforts by other nations, including India, to enhance their shipbuilding capabilities are underway, but experts believe that in the short term, reliance on Chinese production will persist, making the transition challenging for global shipping firms. Nikkei Asia: Jack Ma, the iconic founder of Alibaba, has re-emerged in the public eye after a lengthy absence, making a surprise appearance at a Beijing symposium on private enterprises attended by President Xi Jinping. This event, the first of its kind in 6 years, has ignited speculation among the Chinese populace about Ma's status, as he had previously been sidelined by the Xi administration following his critical remarks about financial regulations. The metaphor of a horse-shaped cloud, reminiscent of a warning issued to Ma in 2020, looms large as he shakes hands with Xi, suggesting a possible thaw in relations between the government and private sector entrepreneurs. Xi's recent emphasis on common prosperity marks a significant ideological shift from Deng Xiaoping's policies, indicating a potential pivot back to socialist principles. As she seeks to revitalize China's faltering economy, the symposium serves as a platform to signal a new direction, yet the absence of Ma's name in official reports raises questions about the extent of his rehabilitation. The upcoming National People's Congress may further clarify how she plans to implement these changes, as he urges billionaires to contribute to the nation's economic future. Thank you for tuning in. The content above showcases the latest briefing reports and analytical synopses, thoughtfully curated by the 6Do team. These insights stem from a wide array of reputable media outlets, think tanks, government sources, and specialized experts worldwide. We encourage you to explore these sources for a comprehensive perspective. Keep in mind that while the content may not always align with the official standpoint of 6Do Brief, it's not meant to be taken as absolute directives for decision-making. Comprising seasoned media professionals, learned scholars, and accomplished scientists, the 6Do team embodies a trailblazing, fully independent media entity. To customize 6Do Brief to meet your professional needs, you have the option to subscribe to a diverse array of briefings on our website, 6dobrief.com. Regardless of your location, you can conveniently receive 6Do Brief via email. Turn the lights on.